Hi guys, you are welcome to Arunge Math Vincent channel. In today's video, I'm going to teach you how to trade in future. If you have been trading for a while now in spot trading, and today I'm going to bring you update and I'm going to teach you step by step everything that you need to know in future trading. Very simple and very easy. Nothing is difficult, and I'm going to tell you everything that you need to know. So this is spot trading account. If you want to go to your feature account, you go to derivative. So at derivative, you can see the options and you go to this USDT feature. So they'll give it a little bit time to upload. So this is how your features accounts look like. So what are we going to first talk about? In your right hand here, in your left hand here, you can say this is BTC. This is where you get to find your pair, your assets, and there are something you need to know very important here. Here is a search button in case of any assets you want to get, like let's say Ethereum, which is ETH. If you type ETH, you're going to see the ETH list is out. You can see ETH in USDT and ETH USD, ETH in USDT, ETH in, yeah, and we have the contra. This quarterly, we have two types of trade in future, which is very important for you to know. We have the perpetual and we have the quarterly. Quarterly is it has a period, it have an expiring date. Why the perpetual does not have expiring date? So most of the time I advise you should go with perpetual contra than going with quarterly contra, because in quarterly contra it has expiring date, which if you get to the expiring date, whatsoever be the price at that time, that is either you take in loss or in profit. So this is where you search for your pair, and this is ETH. We are looking at, if you can type BTC, you can see it will come up. You can type Cardano, which is either it will come up. Any pairs of assets you are trying to look for to trade in future, you can just search for it, which here is a search button. And there are some very important things I would like you to know, which is your leverage. So in the course of this class, we are going to make this leverage to be 10, or let's say 5 for a beginner. Let's say 5. The leverage should be in times 5. You confirm it. That is where to adjust your leverage, which is here. Then this is very important. This is very important. There are these two things you need to understand: which type of trading you are in. Are you in cross margin or isolated margin? This has to be very important, because in cross margin, that is trying to tell us that if you select cross margin here, you are going in agreement that even your balance in your future account, it's used to close a space for you to enable you to hold a position in the market. If you are going with what? Cross margin. That is, let's say if you click cross margin, confirm it. Let me explain something. So now the price of BTC slash USDT is sitting at $38,485. This is what I'm trying to mean now. So at this point, if you buy at this particular place, you have, like in my account available now, I'm having like $16, and you use $6 to take a position here, and the market, you are longing the market, and market go against you, the market go down below where you this, and you are in big loss already, for example. Then in cross margin, that automatic mean that it's going to use your balance amount in your account to fill in the loss, to fill in those loss, then to protect the position you are in. But in isolated margin, which is this, if you are using isolated margin, that is, you are isolated the particular amount of money, or amount of money you are using to take that position. So let's see if you confirm this. That automatically means that if I take a position of $6, no problem, we get to see that better when we enter a trade. So why limits? Here you can see there are options of different kind. We have spot limit, we have stock market, we have trading stop, we have post only, and so on. Why we are going to focus in market and limit, these two options here, market, limit. So let me first foremost to explain what is limit is all about. Limit is that you are trying to get a particular choice of your price of your choice. Okay, market is at $38, sorry, $38,400. So and you want to buy BTC at the range of $38,000. That is your price. That you are saying that if market drop to $38, that is where me I want to buy. So you are going to fill an order. That is what we call an order book, which we're going to explain them one after another. So that is what limit. So when price drop to $38,000, that is where your order book is going to be filled. Your order is going to be filled. While in markets, you are saying that a part at the best price at the moment, let it filled. You want to buy at the best price at the moment. So now that BTC is sitting at $38,450, which automatically means that you are okay with the price. So the system automatic is going to fill you your order automatic, because that is what you want to buy. You want to buy at the market price, the best price at the market. That is what you want to buy. That means you didn't have a choice. Whatsoever they give to you, you accept it that way. So at this particular stage, you don't have to bargain with anyone. But if you want to bargain, that is where you use your limit order, which is this particular place. Then the next thing which we talk about leverage, we talk about isolated, right? Then now we talk about margin. So this is the price of the market, and this is the quantity. What is the quantity you want to buy, and this is your available balance. Here you can say this particular place here, which is your available balance. So either you go in two way, either by shorting the market or you are longing the market. So we can say long, we can say short. Why here is at a particular time you are taking a position in the market, you can put your take profit and stop loss at the same time. You can fill this order at the same time. So let's say for example, now I want to long the market at this particular price. Let's say I want to long the market at particular price of 38,200. So this particular place here is a percentage of amount of money you want to use. You want to use 50% of your money, or you want to use 25% of your capital, or you want to use 70%, 75% of your capital, or 100% of your capital to go in this particular deal. So now this is what this place is all about. So before that, let's dive into something here. So this class is complete tutorial on Binance future trading and a very simple guide. I'm going to take you step by step, as I said earlier. If you are new to this channel, please subscribe to the channel and hit the notification bell for my new video update like this. And secondly, if you are enjoying this video, please give me the thumb up and comment below the comment section. Whatsoever be your question, I will reply to it. So now let's move and see what future is all about. Future is a contract. So future contract is an agreement between a buyer or a seller of a commodity or financial asset at a predetermined price at a specific time or date in the future. So it's a time contract you are going between. So in future, you need to know that the assets is not your own. You are just shorting or you're longing the market. It's a contract you are going to. Let's assume you are okay now. You are predetermined that this market is going to go up, and you want to long the market, and the market wants to go down. You want to long the market. Let's see something again. Let's go down. That is future contract is all about. It's an agreement between a buyer and a seller. That is all in all. So types of future contract, we can see we have commodity future. This include physical asset. In commodity future is include what? Physical asset, which is number one. Let's talk about like gold, silver, and so on of them. They are what? Physical asset. So in financial future, so this is the one we are focusing on today. Financial future. This include the index, forex, and cryptocurrency, which the major thing we are focusing in is cryptocurrency today. In this cryptocurrency, so include what? The index, forex, and cryptocurrencies. The next thing I need to know to, okay, what is cryptocurrency? How does this thing goes about? Let's explain something to you. So if the current price of bag of garri is $100, for example, now if the current price of bag of garri is $100 and a buyer decided to buy bag of garri from a seller in the future at a price of $100, agreement reached. That means between you and a seller and a buyer come to an agreement that a seller is willing to sell his bag of garri at the price of $100. So a buyer and is willing to buy the bag of garri at the price of $100. Then let's see what happened next. Then the price of bag of garri rise to $150 at or at the due date. So the buyer will pay $100 despite the current rise in the bag of garri price, because that was the agreement. So in the there's an agreement between the seller and a buyer of $100. So the seller now decided to sell his bag of garri at $100, then the price shoot up to $150. So what happened? The seller does not have a choice, because that was an agreement. There is an agreement between the seller and the buyer already. So the seller must accept $100 payment. Then automatically that confirmed to us that the buyer make a profit of what? $50 from buying a bag of garri at the rate of what? $100. Then let's look at the next step. What happened? So if the current price of bag of garri rise, if the current price of bag of garri is $100 and a seller decided to sell bag of garri to a buyer in the future at the price of $100, agreement reached, then the price of bag of garri dropped to $50 despite the current drop in the bag of garri price, because that was the agreement price. The buyer does not have a choice. So there is a drop. This is a reverse in the case. So the last one is what we saw previous, is that there was an increase in the price of bag of garri. Now we are seeing the reverse in the case. There was a drop in the price of garri to $50 when the buyer decided to buy at the rate of $100. So that changed the price automatic. Let's dive into say now. This is what I mean. So the market is sitting at this particular place. So I decided to buy this particular asset, BTC, in the market. This is market price, and I decided to use 25%, or let me say 50%. 50% of my asset. So this is one thing I need you to also know. Here is cost. This is what is going to cost. 50% of my asset is going to cost me at what? $7.6. So this is the cost if I'm shorting, but now I'm going to long the market at the present price. I'm going to long the market. So what am I going to expect? So this is your cost, and you need to pay attention to this. Is margin, which margin ratio, maintenance margin, and margin balance. I'm going to explain this when I fill this order. So let me fill this order. Let's see. I'm going to long. This is market. I'm not limiting the market, but I'm longing the market. So I'm long the market at the market. So they are giving me price at the best of they are giving me the asset at the best price, which is this particular price. So let me show you something. If you come to this position, this is position. We have the open order, we have the order history, and trade history, and transaction history. So this is that. So if you look at position now, and this I'm in position times what? 5 leverage. That is what you need to pay attention to, your leverage, which is 5. But I advise minimum should be what? 10. Minimum. Don't trade your leverage should be more than 10. Anybody trading leverage above 10, if you're expert in trading feature, there is no problem. But if you're a new beginner, use minimum. Minimum should be 10. But if you're using above that, I think to you it's just like a gambling, which from 20 and above is from 20 something and above, it's like gambling. You want to gamble the game, but which it ain't supposed to be so. So let's see, this is your position, right? We can see the size of BTC is 0.001 and the entry price is at $38,393.8 level, while the market price at the moment is sitting at what? 38,380 something about, because it's not stable, it's moving up down. That is that. And my liquidation price, so this is what you need to pay close attention to. Liquidity, that is the important. I need to explain something to you to get to understand in leverage. So you see my leverage is times 5. My leverage is times 5, right? So my liquidation point, the higher the leverage, the lower your liquidation price. The lower your leverage, the higher your liquidation price. This is what I mean. If my leverage is times 50, to tell you that at this position my liquidation price also is going to be very close. It's going to be very close with my entry price. But if you look at this, my liquidation price is what? At 30,800. That is about 80,000. Sorry, about $8,000 minus. So if market gets to drop with $80,000, sorry, I say 80. If market get to drop with $8,000, I'm going to be liquidated, which means that I'm going to lose this my margin ratio, which is this $7.6. I'm going to lose this amount of money. That is what it means. Then secondly, get to understand something here better. Now let me explain this. You need to see, this is your margin, maintenance margin here, which you can see it at the moment is at green. When it gets to yellow is a warning signal. When it gets to red is a danger sign, that is you are getting too close to liquidation point. You are going to be liquidated if you didn't pay attention to it. So either you close the position, because you know in this particular you cannot use, when I was explaining this isolated and cross margin, I talk about cross margin. It fill in the space for you. It's fill in the space for you when you are using cross margin. That is your balance. If price is going down, the balance in your future account, it will be filling the space for you, so that to maintain the position for you. Why in isolated? You isolated the particular price of money you are using in that position. That means if market is going against you, if anything happen, you are going to lose the only amount of money you have put in the trade, in that position you take. So now we can see that is what that means here. Then we can say we have a maintenance margin, which is this, and this particular 0 point, this is your maintenance margin, and margin balance is $7.76 dollars. That is that. So buy crypto and convert and transfer. This one is just to balance, and this unrealized profit and loss, this particular one, and balance, which this balance is the amount of money in your account, in your future account presently. So you can see now I'm in profit. That is why it's showing green. When you are in minus, it's going to show you red, which you can say 1% profit, which is giving me 0.08 cents, which is that 1%. That is that for 1%. So this particular place, if you want to close your position, like if you have many position, you can close it. For example, let's talk about this open order. Now let me explain something about limit. Now I have like $9 balance, because 7.7 is already in a position. Now let's get to another asset, which let's say ETH, for example. So you need to know something very well, which is very important. Before taking a position, you have to do your technical analysis very well. Either you have a place you get your signal from, you get your VIP signal, that is when there is a buy order, you get, like me, I have, because I have one, but at this particular course of this study, I'm going to show you, because before you take position, you need to do your technical analysis. That is very important, which you need to pay close attention to. Then, before you take position, you cannot just come inside the market and see market like this and jump inside. It's very dangerous. It's very dangerous. So you need to get to that. So this asset is sitting at this particular place, and I want to buy at, this is and $2,813, and I want to, let's make it very simple so that it can pick. Let's say I want to buy at 2,800. So you can come to your limit, you click on the limit, and also we are not using cross, we are using isolated. So either, let's say in this session we are using cross section, you confirm it in cross section, then you fill and remember it's in limit. Your price, I want to buy at 2,800. So this is what I want to buy. If market get to this particular price to pay me, and which is 75% of my capital, I want to use this. So it's telling me I'm going to get this particular place. So this is realized take profit, and which I explained earlier, and this is reduce only, which then if you choose this, it will only use this. But this particular one, which you end this particular one, use this particular one. But I'm not using any of them. So at the point I want to buy ETH, which is Ethereum, at the price of 2,800, which is going to cost me, I'm longing the market, which is going to cost me 6.86 dollars. So I'm going to long the market. So you're going to see it's going to confirm it, long the market. So order submitted. So if I scroll down now, I'm going to see my order. You see in open order I have a position here, right, which is of BTC, is running already in the market. But at the moment I have a position which I opened. I said that when market get to 2,800 should pick me. So automatically that means that if market do not get to this particular price, my order will not be filled. It will remain here until price drop to 2,800 before it's going to pick me. So that is how it is at the moment. So I need to wait till the price drop. That is at my own choice. I want to pick that position. That is what it simply means. And we can see here I have a position running already, which you can see is percentage at 1.44%, and it's giving me 11 cents dollars, and my leverage is what, 5%. Leverage I'm using. So that is how future is. One thing you need to know, you need to pay close attention to your technical analysis. You need to make sure you done your technical analysis very well before you short the market or that you long the market. So if you have any question, please don't hesitate. Ask your question in the comment section and I will reply to your question. I'm here to respond to every question that's being asked. So feel free to ask your question. I'm going to, if you're enjoying this video as well, give it a thumbs and I will appreciate that. Let's grow this channel together. I really appreciate. So let's continue. So that is the agreement. So now, despite whatever that happened, if market go up and do not fill that order, that is how that order will remain. But if the order go and peak, and if it go up, I'm going to be in profit, and if the order go against me, I'm going to be in loss. Remember, in this ETH I use cross margin. That means that in my account balance, available balance, you can see I have 2.29 dollars. So if my order peak and there is issue, if price is going against my direction, if the price is shutting down and I'm longing the market, that means that I'm going to be losing some money, and the cross section is going to use my balance here to be able to fill it, to maintain that position for me. So that is how this thing works. So it's very easy. At the end of this video, I believe you know how to trade future perfectly without issue. So I'm going to give you some simple technical analysis. Let's watch something. So this is your chart. We can see market retrace from this level of support down to the downside. Then market is sitting at this level, which is a support level as well. This, when we draw a horizontal line here, we can see here as well is a support level. So you can see it is a strong support level. So market still have the tendency of coming back to this particular place before it goes. So when you do your technical analysis, analyzing this, if you want to learn support and resistance, you can check the channel for other videos of mine to learn better. There are other content there that you can learn to know more better in trading. So this is it. So this market is at this particular place. I'm expecting the market should drop to this particular level here. Then I can come and put my buy order at this particular level. When market drop to this level, then it's going to pick me automatic to the up because I'm longing the market. So that is what happened. You can use different time range, 1 hour, 15 minutes, 1 day, 1 week, and so on. There are different kinds of time frame you need to, if you want to as well. So let's go back. Sorry, let's give it a little bit time to load up. So that is that for that. If you enjoyed this video, please give it a thumbs up and subscribe to the channel and hit the notification bell for my new update. If you have any question, please don't hesitate, ask your question in the comment section and I will reply to your question. See you in my next video. Thank you for watching. I'm happy to see you guys in my next video again. Nice.